Today in the crypto space, we see the market taking a bit of a hit. Bitcoin down approximately 2%, Ethereum down approximately 3%, and the rest of the altcoins deep in the red. We have some Solana dips, SUI, AVAX, Hyperliquid, Near Protocol, and many others. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, guys, I want to talk about these large caps. I want to talk about Cardano. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunity, whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here, because we can see that the market in general is taking a bit of a hit. It's not a major one, because we do see that the overall market cap at the current moment is holding steady, as you can see, right around the $4 trillion mark. And what's also interesting is that we're getting a bit of increase in trading volume. It's not great, it's not, a lot, but at least it's there, and it's in correlation with the rise of market cap, the slight rise. But generally speaking, guys, if you're looking at the 1 hour fractals here in the top 100, you do see retracements. You see that the large caps and the rest of the space, led by Bitcoin and Ethereum, of course, are dipping down, some more than others, some neutralizing. In fact, we look at BNB looking great, still going sideways. Did not make a lower low or a lower high. You know what I mean? In fact, it made a higher low. So it's not bad. You got to admit, even though Bitcoin is dipping, Ethereum looks a little slumpy here on this retracement. There's projects out there that are neutralizing all of it. Solana's not one of them. You see Solana's down approximately 4.5% following Ethereum's lead, with that retracement, and many others. Obviously, all these staked Ethereum projects or proxies to Ethereum should be taking a bit of hit, but we do see Cardano neutralized pretty good, 3.5%, but still no lower lows. We're still fine. We're still okay. Chainlink is still a beast, guys. This thing has no chill. As you can see, it's consolidating at the current moment. The bigger question is, do we come down through the imbalance and get a proper retracement? Possible here, guys, but we know that Chainlink has been super bullish, and there's no doubt about it that it should remain bullish. The thing is that, we could come down for a dip to accumulate and buy and get all that basically on a discount. So we got to pay attention. It could be possible, but at the current moment, guys, it looks like Chainlink is going for a structure than a real quick retracement. So we got to be patient here. Hyperliquid, guys, down 6%, dipping. We do have dips across the market, you can see. I would say the average dip today is maybe about 5%. AVAX, as you can see, and we have, SUI coming down a little bit, 5% here and there. As you can see, Uniswap, another 5%. We have some others that are holding a little bit better, but still they didn't run up either, like Polkadot. So the reality is that, projects that run up have imbalances that allow the price to dip a little bit faster than expected. So 5% dip on a good gainer today should be expected. Look at Athena, 4.5%. BitTensor is down 5% today, and to be honest, BitTensor Tau hasn't been doing the greatest in the last little while. Neither has been Near Protocol, for that matter, and it's down 5.5%. Aptos another 5%. So like I'm saying here is that today we're not even in another double-digit dip scenario. It's still a scenario of which we are seeing 5%. And the last 7 days, some of them not even double digits either. So we're getting a slow grind. And in the meantime, we're also getting a bits of relief ever so often that is causing a very sideways or neutralized retracement. However, the trend is still to the downside, guys. And the way things are going, I can anticipate, a bit of a sweep at any moment now, where we get oversold, get people shaken out, not us, of course, and then continue to the upside. I feel like we're getting a bit of negativity, more than we're expected, and this is a sign of distribution before a quick move to the downside. Okay, so keep that all in mind. We do have render coming down 5%, WLD, you can see the average dips are about 5%, 4%. Again, the ones that have been showing strength tend to dip a little bit quicker. Sky's coming down like a, look at that, like a sinker. Look at that, boom, straight down. At the end of the day, guys, this is the thing. When we see red in the market, we start to see fear. And when Bitcoin brings that fear, Ethereum reacts. And then Ethereum lately, because it has been so strong, can also, create that fear and add to the fear. And when you have Bitcoin and Ethereum working in tandem against our emotions, guys, altcoins sell off because they're risk on and they sell off. So we just gotta pay attention. At the current moment, we're seeing a bit of a sell-off, not huge, but a little bit. And then what we should be asking us, what are we gonna do about it? Ask yourself, what are we going to do about it? Ultimately, are we buying? Are we accumulating? What are we buying? What are we accumulating? Are we doing large caps only? And obviously, guys, not financial advice, but the large caps should move quicker and sooner. What I mean is, ultimately we get that recovery a lot faster in the large caps, particularly when we start to see have uncertainty in the market. So keep an eye on those. And of course, today I want to talk about Cardano. But before we do that, let's begin. Let's take a look at Bitcoin and see what's going on with the big heavyweight here in this market. Because at the end of the day, Bitcoin, is taking a bit of a dip, still within structure, still higher low, many higher lows and higher highs on this uptrend. But we can identify a bit of froth right into the zone that eventually could act as a little bit of a reversal. I'm not talking about major dips, but a bit of a reversal could definitely happen, guys, and we need to be prepared. So let's take a look at this in a little bit more detail. So what we do see again is a bit of a reaction here on the EMA. The 50 EMA is getting a bit of a reaction. You can see the volume is totally here. There's an imbalance below that volume gap that we always look for to take advantage of. And we do see the 110,000 being a very, very possible range. Let me get that TA going for you guys. As you can see, we've been tracking this pretty accurately in the last little while. So I'm quite content that we were able to stay one step ahead, amongst all of this. Obviously, there are some random anomalies, some random projects that are pumping like crazy, and then there's some that are dumping more than expected. But generally speaking, we can see the entire market on a slow grind, including Bitcoin. The problem is with Bitcoin is that it's right now at an inflection point that is not being respected, in the sense that we are seeing Bitcoin's price fall through horizontal levels, which I do not appreciate. As you can see, if we continue falling here, we continue falling through the volume gap, and because there's no supply and demand here, there's no emotional support, which means that there's no reason to be buying the dip throughout this volume gap, right? We have to understand that this bottom is going to get tested, and the question is, do we sweep that bottom? And at this point, it looks very likely. In fact, I would anticipate that the price could come down to about $109,000, $110,000, and then from there finish this retracement and then find some market structure into this level that shows a shift, a change of character back to the upside. But in the meantime, we have to understand that there's a lot of trendline liquidity that could be hunted here. As you can see, rising wedges introduces trendline liquidity right at these bottoms. Lots of little bottoms, lots of stop losses and liquidation points along the way that market makers may want to come and hunt. So that's what I'm expecting. The fact that we broke the trend currently is not a good look. The fact is that we came up and got this manipulative moment right here where we swept those highs and came down back into structure, and currently coming down to the bottom of the range as expected, guys. Remember, we've been tracking this on a daily basis and we pinned it spot on. Now all of a sudden, where do we go next? The only thing that could happen here is that we respect the TA or we don't. What I mean by that is, do we stay above this horizontal white line, or do we continue trekking to the downside and get to the next order block where emotions and liquidity lies, which is down around here? Now, it doesn't mean that we have to hold support at 110. Let's be real about that. We could chip away at some of this and see if the bears have enough strength and come right through it. Maybe we get some support at 106. That's even possible. Worst case scenario, obviously, we fly right all through this and come down to 102. Guys, I don't want to get superly bearish here, but that's the reality of this chart. We can see that the order block is here, and we have to ask ourselves, is this enough of a painful scenario for market makers to have an incentive to cause the price to come down there? 100% possible. Okay, definitely. And it still remains bullish. We got to be real about that. We can come down, sweep right into this level, sweep right below the 200 daily EMA. Again, that would be very fearful, but would bring a lot of fear to the market and still come down to these levels. Now, for me, I want to see what happens here. For me, this is the buy the dip opportunity. I'm not really crazy about buying dips into this area because really it's not enough of a dip for me. It's not enough. I want to make sure that I am improving my average cost. I am, not only scaling up my positions, but I want to improve my average entry. My exposure to the market right now is spot on. For those of you that are on the sidelines looking to increase exposure, guys, you have a challenge. Your challenge is to increase your exposure, to increase your exposure through buying the dip and accumulating, but at the same time reducing your average cost of your asset. Right? That's what your challenge is. And the only way to do that is to let the price fall and buy the dip. The problem is that we don't know how low we go. In fact, we could get support right now, bang, and go up for another higher high and see Bitcoin at 150. That's possible, guys. Nobody knows what's going to happen. But I can tell you this, if we come down to these levels, it's a great opportunity. Have some dry powder ready to go to deploy. I'm putting my money where my mouth is, and that is exactly what I am doing and preparing for. So keep that in mind. Now, again, let's move on from Bitcoin, because now we understand what Bitcoin is at. Bitcoin is at an inflection point. Bitcoin could definitely introduce a lot of fear here the way it stands. So how does that reflect into the altcoins? And more importantly for this video, how does that reflect into Cardano? I'm telling you this, that if Bitcoin dips, Ethereum's going to dip most likely, and may not dip as hard as we think, because again, Ethereum right now is showing a lot of strength. It might neutralize some of it, but it will dip. And because of that, we will see the altcoins also dip, including Cardano. Let's take a look at the Cardano chart. At the end of the day, guys, we're seeing Cardano consolidate here, which is super bullish. Right? Once we see an impulsive move to the upside, there's a couple of things that can happen. Guys, mind you, look at all this volume, okay? So just understand that is a volume-backed pump. We got market participation in there agreeing with this pump. The issue that I have at the current moment is that either we're going to continue structuring out, which is amazing, bullish, ready to go, guys. Continuation patterns all the way when we consolidate after a nice impulsive move. However, guys, the next option is retracement. So consolidation or structure or retracement. Now, as of now, the data suggests that we're structuring out into a bull flag for continuation to the upside, also known as a quick exchange of hands before a continuation. Okay, so profit-taking breathers. That's basically what it is. So what we should do, because the daily's not doing a good job giving us data, let's do the 6 hour. As you can see, we're in a bit of a retracive scenario after the impulsive move. And if generally speaking, when we see retracements like this, they usually lead to continuation patterns. Right? Obviously, in this instance, supply is outperforming demand just a little bit, which is somewhat normal when you start to see a little bit of bearishness from the heavyweights and people in a lot of profit based on green candles, right? You see a little bit more sell pressure. But ultimately, when all of this is done and the sellers are done and the market recovers, you know what's going to happen, guys? It's very likely that we get this as a continuation pattern to the upside. Now, we also have to introduce possibility, right? Because we don't know this for certain. And again, we have to be prepared. Guys, be prepared. If we do fall, and we keep on coming down, the next target for me is obviously this volume node right into here at these tops and tops and tops. We have the 200 EMA here on the 6 hour doing its thing, but I'm curious to see what type of reaction we get at about 82 cents. For me, that would be a nice reactive level to act as a level to bounce, a support zone. And if you go back on the daily, you can see that ultimately there's a huge wall of supply and demand right in here, lots of emotions, to the point that it kind of looks like a fair value zone. This zone from between 83 cents all the way down to about 70 cents is pretty fair value, especially right into here. So the question is, how deep do we go if we retrace, into that fair value zone, or do we come down here and then reverse? In the meantime, guys, all we could really do is, again, stay on the 6 hour and track what Cardano is doing, because if Cardano keeps on respecting this structure, the best thing that you can do for your portfolio is to DCA, put a stop loss, if anything, if that's what you want to do. You want to defend yourself on spot. If you're getting into leverage, you need that stop loss, guys. Put a stop loss right into into this zone, maybe a little lower so you don't get wicked out, but ultimately anticipate this to become a continuation to the upside and DCA into your position as close as possible to your invalidation. If it drops below this line, get out and then wait for the price action to nestle right into the zone. Again, 83 cents. We'll wait for a market structure that suggests pivot, a nice change of character, and then we'll bounce to the upside as a continuation. Guys, obviously this is all dependent on the sentiment that Bitcoin and Ethereum bring at the current moment. They're both coming down. There's a little bit of negativity in the market, but nothing crazy. So this is the most dangerous thing right now in this market. A lot of the market cap projects, I just want to zoom out here so you can see Cardano for being one of them, has created a beautiful market structure on higher time frames. Okay, beautiful. It's a very nice double bottom scenario. We changed characters from making lower lows and lower highs to higher highs and higher lows. Right? So what's really happening is we went from a downtrend to an uptrend. This was a pivot point, a beautiful, well-crafted pivot point right here at the bottom, which means that it's very likely that we continue to the upside in a trend that, defines, a continuation, and maybe eventually we start getting to about all-time highs and price discovery, and we start cranking away through all of this. But little by little, guys, this is looking really, really nice. In the meantime, anticipate those dips, anticipate levels of support at lower levels of, again, 82 cents is very, very likely because that was the previous healthy breakout zone anyway, and that's about it. Let's take a look at oscillators for a second to see if we're overbought. Guys, the only other issue that I have here, and I'm going to bring this to you, with obviously a grain of salt, because, divergences can get invalidated in these types of conditions, particularly aggressive bull markets and altcoin seasons. As you can see, the oscillators right now, both momentum and trend oscillator, are showing class A bearish divergence on these two tops. Now we can get a third drive, just keep that in mind. We can definitely come down and dip and go up for a higher high, no doubt, while still maintaining a downtrend. The problem is that eventually these type of structures get follow through, even after 3 drives of class A bearish divergence. So we have to be cognizant of the fact that this might be just a little bit early to get absolutely bearish, but at the end of the day, we're getting our first signs of bullish weakness as we approach the resistance, which again is right around these tops. Okay, so we can go up for another higher high, and we can see that the trend is still up. But in the meantime, how many little dips do we get? Do we get follow through from this divergence? Do we maybe come up, do one of these, and then come down, and then continue? You get what I mean, guys? The peaks and valleys need to be, addressed, because that's the way you're going to get your entries. Okay, so right now there's divergence clearly. Let me expand these just a little bit, guys. If you want to know more about these indicators, they're called Synergy Signal. I got links in the description, the custom indicator. Doing very, very well lately. As you can see, we do have a bearish response coming in hot with volatility. We got rejected right around here, and most of the times when we get rejected, we come down for a full reset to the downside. The bad part about all of this is that momentum, as you can see, that these two peaks are on a downtrend. The question is, what happens to price when volatility, orange line, and momentum are on a downtrend? And if we start breaking lows and get oversold right into here, what do you think is going to happen to the price when both momentum and volatility are coming to the downside after a class A bearish divergence, after the last expansion being quite weak and having a very strong expansion right into here? What do you think is going to happen? My bet is we continue showing negativity in the market until proven otherwise. That's the only stance that I have here on the daily, and I got to be very clear about this, because ultimately, guys, I don't want to start piling into the FOMO. Let's look at the trend oscillator real quick. The trend oscillator is being a little bit more neutral, but still you can see this expansion. If it does reverse here, it's not looking good. The EMAs are in the bullish control zone. EMAs are facing up. I do see a bit of a hesitation. Keep in mind that this all could be gearing up for a fake out. Okay, there's no confirmed reversal here. All I'm using is oscillators, no market structure. Okay, that is very dangerous. I'm just throwing that out there. You shouldn't be trading only oscillators. Market structure is key. Market structure is still bullish, while oscillators are showing you signs of negativity. Is that actionable? Not really. Okay, you're just building your thesis here. Okay, so just understand that the oscillators can definitely be invalidated very quickly through a nice pump, and then we start moving to the upside once again. We're just being very hesitant. What I'm saying here is it's very hard to get into fresh longs without a good risk to reward ratio, because the oscillator's showing you frothiness and weakness. That's basically what I'm saying. So get defensive here, guys. And if you're going to get offensive, be a ninja. You might have to get into a quick move to the upside. That's fine. Put yourself at break even as soon as possible, just in case the market reverses on you and you don't take any losses. You're nice and safe. All right, guys. So if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one. And don't forget, buy the dip.